The Morgan Report with David Morgan.
David Morgan of themorganreport.com for the week ending 31 December 2021. Well, last day of the year. Happy New Year to everyone, everywhere. And I'll just start off with the landing page here of the Morgan Report, as you can read. And why do you need it now more than ever? Of course, there's competitors, which, you may prefer to subscribe to, but nothing more critical to the financial future than a sound money system. This is the premise of the Morgan Report, among others, but that is the basic thesis that all fiat fails. What can we do as we the people versus what the elite banking institutions want to give us? So I did an interview just a moment ago with Elijah Johnson of Liberty and Finance. And that pretty much summarizes my thoughts for the year 2021 in the precious metals versus the stock market, the bond market, the credit markets, and what have you. So I would suggest that you wait for that to appear, and all of those appear on the blog. So if you hit the blog tab, which I am doing, you will see our blog come up, and they're pasted in here with these big tiles that you can click on. And when you click on one, it'll open up a new page. You'll see the same tile. Scroll down, look for the arrow. You push the arrow and you will hear the podcast. And of course, there's always an ad for the Morgan Report, which the price will be going up next year, which is tomorrow, basically. So this is last minute. You probably won't even see this today, but we've been putting everything out on Twitter. If you want to follow us on Twitter, click that button. On LinkedIn, that button. And YouTube, that button. Suggest that you might want to consider both the Twitter feed and the YouTube feed. A lot is posted on both those. Twitter, I have, most of those are mine. I do let a couple people that I know and trust access my Twitter account. And they haven't done me wrong yet. They put up some actually usually more humorous stuff than I tend to post. But regardless, you might consider that. Facebook's just a corporate account. I wouldn't bother with that. It's just basically same stuff you'd get pretty much on the Twitter, pretty much what you get on the blog. So you can just bypass that. Silver watch list. I think you've seen that before. This is paid by me. These are not necessarily in the Morgan Report, but they are, pretty good look at on a daily basis. As I said, I paid for this. Most of these companies are pretty good companies. So if you're looking for, they're not necessarily silver-only companies, but primarily looking for silver. Their asset base may be, gold or another mineral, but usually it's at least partially a silver company. And for those that don't know, I'm an ambassador for the Load Project, which is here. You just click through there and you can read about it. I think the best thing to do is scroll down and just watch this first video here, Imagine. It's a pretty well done video, in my opinion. Experience and freedom, which, of course, as far as I'm concerned, the precious metals are probably the only way left outside of some cryptos. I mean, I'm neutral, slightly positive on them, and you can watch my thoughts on the blog. I've been doing a series of crypto conspiracies with John Perez mostly. Also brought on Cyrus A. Parsa to also give his thoughts on where we're going, more on the crypto side as well as the AI, artificial intelligence. So again, I'll be brief. Silver and gold did not perform as most of us in the precious metals community, even onlookers, would expect, especially with the amount of massive funny money printing by the United States. And as bad as it was in the U.S., it was worse in other countries that did experience hyperinflation. The Turkish lira, as an example, of course, what did gold do in terms of lira? Well, it skyrocketed, which is, of course, what you'd expect. But the money powers still use the dollar as a primary reserve currency, and this is not to be unexpected until the very end. And the end is nigh. I believe that strongly because the amount of transactions that both Russia and China and others, the BRICS countries, but primarily China and Russia, are circumventing the dollar altogether, circumventing the SWIFT system, and a lot of more trade and import exports going through a non-dollar basis. This was practically impossible using the petrodollar for decades, but it's come to the fore. In fact, I did an interview with the Economic Ninja on that very topic a few months back, and he was the one that brought it to my attention when the news first hit the wire. So I think next year should be better. I just finished the Morgan Report that will be posted tomorrow. Let's do the first Monday of every month, which is the 3rd of January in this case, talking about my outlook for 2022, which is actually not that bright for a while due to the Fed maybe following through on their rhetoric, which means that they will put up interest rates higher. And this is usually a negative for the gold price. Really, it doesn't have a true effect until you get a real rate of return, which, of course, if the inflation rate noted by the authorities as being like 6.5%, until you got above that level in the credit markets, the debt markets, you really don't have much suppression on gold. But everybody's been trained to think otherwise. Any increase in the rates is going to hurt gold. And so I'll go along with that. The market's showing that, and the market knows more than anyone. I've said that for years. So I do expect a little bit more pressure on the precious metals, but not a lot, because at the same time, China is lowering their interest rates. And who's number one or number two in the world as far as true capital formation, meaning production? It's either China or the U.S. China's we're told is number two. Maybe it is. It's a close second. Certainly go to any Walmart and see how many things you're buying that are made in China. Regardless, the point is that the last couple times this happened, it put in a bottom for gold, and we got a great rally from it. And I'll credit Chen Lin with this information. He did the analysis on this, and I'm happy to report it was well thought out, and he had the information to back it up. All I have to do is really look at a chart and see what the interest rates were doing in vis-a-vis China and the U.S. So I do think we're going to see a better 2022, but I don't think it'll be immediate, with the exception of the proverbial black swan event, which at this time is probably more likely than not, meaning, the dark winter, power outage, who knows? I'm not suggesting it's going to happen. I'm just saying be alert, because the dynamics of the world are changing rapidly. We have Santa Claus Schwab telling us that a cyber attack would make the CV situation look like a mere inconvenience. If those words don't scare you, I don't know what will. And again, is there going to be a cyber attack that's going to take out part of the grid or part of the power system or part of the communication system or part of the brokerage system? I don't know, but they've run a test, I think, on 10 countries. And usually these test cases turn into reality at one point in the future. So just be advised that's the case. So I think I'll leave it there. Appreciate all of you. Hopefully I've been of some service to everyone that tunes in, and I will continue through 2022. And it could be the pivotal year. In fact, I think it will be, meaning that I hate giving predictions. It's hard to win when you're right or wrong. If you're right and it goes higher, you were too not bullish enough. If you're bullish and it's under your prediction, a lot of people will be upset or can be upset. But I do think that the second half of the year will be better than the first half. Remains to be determined, and I do think we'll get above that proverbial 30, which I thought would be accomplished this year in 2021. It really wasn't. It printed there maybe once or twice, never sustained anything above that level. Retail prices continue to have a high premium. Wholesale prices continue to have a higher premium. Tightness in the market is far greater than what the price would suggest. Gold is still being accumulated by the major powers. Russia did sell some for foreign currency, as Jeff Christian had indicated in one of his Kitco interviews. So I'm going to leave it there. Again, Happy New Year to everyone, and I'll be back with you on a weekly podcast next week. This is David Morgan, The Morgan Report, signing out.